Hey investor friends, I'm Michellemarki, and today I'm going to do an update on the stock that I like to study, Alibaba, and what its financial performance has been like so far this year, and what superinvestor activity is going on, and also the current state of Baba's delisting risk, and also what you would have made if you bought Baba stock on its IPO exactly 8 years ago on September 19, 2014. And if you also enjoy studying Alibaba to see if it's a good company to potentially invest in, or if it might be the best contrarian play of our generation, please be sure to like and subscribe to my video and YouTube channel, and let's get into the update. And starting with superinvestor activity, after Alibaba had been one of the hottest stocks throughout 2021, it looks like superinvestor sentiment has cooled on Baba, because out of Dataroma's 79 superinvestors, only a dozen still own Baba, and chief among them include Charlie Munger of Daily Journal Corporation, that has about 19.5% of its portfolio in Baba, making up $34 million, and they've owned it since the first quarter of 2021. And second is Bill Miller at 5.25% of the portfolio, owning about $94 million of Baba. And Bill Miller has actually been a long believer, where it seems that he's owned it since the second quarter of 2017, as well as Guy Spear has about 3% of Baba in his portfolio, and that makes up only $5.5 million. So even though these super investors seem to have owned the most of it in their portfolios, the ones that have the most Baba ownership include the 6 that I've asterisked here, where these investors have at least $30 million invested in Baba. But among some of the super investors that said goodbye to Alibaba included, once upon a time, Ray Dalio of Bridgewater Associates, where they had owned it from the second quarter of 2018 and sold out in the second quarter of 2022 at $814 million worth. And also Greg Alexander of Conifer Management, and he owned it for over a year from Q4 2020 to Q1 2022 at $256 million worth. And Monish Pabrai seemed to have followed Charlie Munger into Baba by owning it also in the first quarter of 2021 until the fourth quarter of 2021, and he had about $58.7 million worth. And finally, Phil Town owned it for less than a year from the second quarter of 2021 until the first quarter of 2022 at about $17 million worth. And speaking of Phil Town of Rule 1 Investing, I actually heard him say on a recent Invested podcast episode that he didn't really consider enough the significant regulatory risk that his own government, the United States, might pose to owning Alibaba as a stock. And he seemed to say that this was one of the big reasons why he ultimately sold Alibaba, in addition to the potential war tensions between the US and China, but that aside. And out of the dozen investors that own Baba still, 6 of them were adding to their position, while 3 of them were reducing their position in Baba, including one of the biggest current owners of $248 million of Baba named Christopher Davis. So out of all these super investors, it looks like even though some of them are still optimistic about it, they're starting to be a little bit tempered in their enthusiasm about Baba. And there was plenty of regulatory drama this summer, where on July 29, Alibaba got added to the SEC's potential delist list. And then about a month later, on August 26, US and Chinese regulators signed a cooperation agreement allowing for US regulators to go and fly over to China to inspect the audit documents of Chinese stocks that are listed in the US, so that perhaps the 261 Chinese stocks may not have to be delisted from US exchanges eventually. And just to put some of their market value in perspective, they make up about $1.3 trillion worth of market value, which is just about the same as Alphabet, the owner of Google. So keep that in mind. And also another interesting thing is Congress is currently debating a China competition bill, which would want to shorten the audit document inspection deadline to March of 2023. So the clock is ticking for US regulators to be able to not only inspect, but also okay a bunch of Chinese companies' audit documents, and they're going to have some initial results by December 2022. And so it's going to be a waiting game till the end of the year to see if some of these companies will get off of that delist list. And also, analysts at Goldman Sachs have this model that says the market is now pricing in a 50% probability that Chinese stocks would be delisted, and that's down from a 95% probability that they'd get delisted from March. So that seems to be a good sign, but still basically a coin flip as to whether some Chinese stocks will get delisted. And as it's been all over the news, China's economy has been slowing down rapidly, where their real GDP growth rate is projected to only be 4.3% this year, which is way slower compared to their prior years that were north of a 6% GDP growth rate. So this is huge for China, where it looks like they're suffering from a real estate crisis and a big housing bust, where something like 96% of Chinese people owned real estate. So that's going to take a big hit in the economy, as a lot of people are being restricted from owning more property. And also overall, the Chinese government has to lower interest rates and inject stimulus into the economy just to try to spur some spending and do some growth in the economy. But overall, it looks like Alibaba has also taken a hit from this depressed economy, where it looks like their financial performance has been declining over the last few years. And I'll share some of my highlights that I've pulled out from their second quarter ending June 30th, 2022, the results of which came out on August 4, as well as the fiscal year that ended on March 31, 2022, that came out on May 26. And among those results that came over year, some of them were not that good, including how net income, which declined by about a third of what it was in 2021, and free cash flow that declined by about 43% from what it was in 2021. But there are some bright spots, including the cloud revenues, bringing in about $11.6 billion in the year ending March 31. And that's an improvement where it increased by a 23% year-on-year change from about 60.5 billion renminbi in 2021 to about 74.6 billion renminbi in 2022. And that's way lower compared to the 62% increase in cloud revenues between 2019 and 2020, where it went from 24.7 billion renminbi to 40 billion renminbi, which was about $5.7 billion worth. And there's also an increase of total revenues over the years. So again, like compared to the years between 2019 and 2020, where it was 35%, between 2021 and 2022, it only increased by 19%. But overall, it's been increasing pretty steadily, where for 2022, the increase of total revenues was about $134.5 billion. And overall, we've been seeing a positive trend there. And it looks like finally the cloud business is starting to be relatively profitable, where according to this snippet from the annual report, they wrote that the adjusted EBITDA of cloud segment, which comprised of Alibaba Cloud and DingTalk, had a profit of 1,146 million renminbi, and that was equal to about $181 million in the fiscal year 2022, compared to having a loss of 2,251 million renminbi in fiscal year 2021, which was primarily attributable to the realization of economies of scale and partly offset by their increased investments in DingTalk. And then looking at their cash flow and balance sheet, it looks like their free cash flow improved in the 3 months that ended June 30, 2022 by about $3.3 billion, which was an improvement compared to the same quarter in 2021 by about $213 million. So that's a good thing. And then they had about $3.5 billion worth of share repurchases or buybacks of the BABA ADR, which stands for American Depository Receipts, or is also known as American Depository Shares, or ADS. And that $3.5 billion of buybacks compared to how they only had $2 billion of buybacks in the first quarter of 2022. And overall, they have remaining about $11.9 billion earmarked for future buybacks out of their total current share repurchase program amount. And overall, they had a remaining net cash of $50.8 billion, which decreased by a net of $3.2 billion, including the $3.5 billion in buybacks compared to the first quarter of 2022. And then finally, looking at cloud revenues in the quarter ending June 30, 2022, they only increased year over year by 10%, comparing the second quarter of 2021 to the second quarter of 2022. But their year over year growth is significantly down if we look at how they previously performed during the same quarter in previous years. Like between Q2 2020 to Q2 2021, their year over year cloud revenue growth was 29%. And from Q2 2019 to Q2 2020, their year over year revenue growth in cloud was 59%. So overall, based on some of the current trajectory for Alibaba, to me, it surprisingly slowed down quite a bit, because you would think that in spite of COVID lockdowns, that Alibaba should still be able to thrive, because they have a lot of involvement in e-commerce and also with cloud. And you would think, compared to some of their American corollaries like in Amazon or Google or Microsoft, that they should have been able to do well in spite of the lockdowns, but it seems like they've slowed down a lot, all things considered. So I'm wondering when they'll be out of the woods, and that will largely depend on when the Chinese people will be able to be free out of the lockdowns, and also if the Chinese regulators are not coming down so much on Chinese big tech. So among some of these factors currently, Alibaba has been hampered quite a bit, but maybe they'll be out of the woods when some of this kind of lightens up again and the Chinese people can go back to doing the normal things that they used to do, much like how a lot of the American population is back to doing. And finally, at the time I'm recording this, Alibaba closed at $87.66 on September 19, 2022. And if you had bought Alibaba at its IPO price of $68 on September 19, 2014, 8 years ago, then possibly you could have made 3% when you adjust that $68 for inflation, which in today's dollars would be $85.07 a share. So that's not a really good return rate. And then you might have lost money if you actually paid the closing price of $93.89 that same day, which in 2022 dollars is equal to about $117.46 a share. So sadly, you might have lost 25% if you had bought at that maximum price. And maybe all things considered, even though Bernstein analysts seem to have upgraded Alibaba in late July and saying that winter is ending for Baba, maybe it's a long thaw in terms of winter still very much being the case of what Alibaba is still in for a while, like it previously experienced after the dot-com bubble crash back in 2000. So maybe we have to wait until Alibaba recovers some more from here, but don't give up faith. It could perhaps be a potentially good buying opportunity if you've studied this stock and if you have conviction in it, unlike some other investors that have given up on it, like Ray Dalio. But if Charlie Munger's right, he's still in it. So maybe that's something to hold some faith in. And if that helped you, please be sure to like and subscribe to my video and YouTube channel. And I wish you well on sticking with Baba if you're in it, or just studying it if you're not in it. So till next time.